Hello everyone, I'm Dr. Stock, and in this video we're talking about federal funds rate, jobs data, inflation data, and also the FOMC meeting that's coming up at the end of March 21st and 22nd. What in the world is going on, and what does it mean for markets? That's all the stuff that I'm going to talk about in this video, and I'm going to do it in right around 10 minutes. So that means that I better keep a move on. In the spirit of moving forward, take a look down in the description, find my link for Moomoo, click on it. By using my link and signing up and making a deposit, you can get up to 17 free stocks. By depositing $100, you get 7 free stocks, which includes 2 AI draws, also 5 other stocks valued up to $2,000. This offer does expire, so take advantage of it. Also, using that link, by depositing $1,000 or more when you sign up, you still get 2 AI draws, but you have 15 free stocks valued up to $2,000. It's an absolutely awesome opportunity available through my channel, through my link, so check it out. One other thing before we get started, you should also see that link for the Patreon down in the description if you'd like access to my Patreon exclusive content, which is expanding all the time. Also access to my private Discord, my buys and sells, all that is over at the Patreon. That link is down in the description. It helps to support this channel. Just some free ways: like, subscribe, and ring that notification bell to see anytime that my videos come out. I'm Dr. Stock, Doctor of Education. Let's get right into it. So the first thing that we should look at for what's rattling markets is the fact that this bar on the right is taller than the bar that's on the left, and that's enough to make the markets react negatively based on the information that we got today. Basically, the initial jobless claims, even though it came up a little bit, which is a little bit helpful, honestly, it bumped it back down. We were at this being almost an 80% chance for a 50 basis point hike in March, which would mean a more hawkish Fed than we were really expecting. Now that came back down to 63.1, so it did ease a little bit, dropping by about 15%, shifting a little bit back towards just over a third of a chance of getting still that 25 basis point hike in March. Now, there's going to be a lot to change between now and the FOMC meeting. Jobs data tomorrow is going to be one of those big things to watch. Let me click on this compare button here. And when you look at the left, the darkest blue that we have, so this is what's current. If you look with just one bar over, you can see how much less likely it was that we got that 25 basis point hike just yesterday. And honestly, I think the fact that we had 10% higher in initial jobless claims than we were looking for is something that really helped tip the scales back a little bit in the other direction, even if it didn't flip it all the way back to that 25 basis points being the most likely scenario. Now, we don't know that's going to happen. It's not a guarantee. These are just those probabilities. But look how high it was just 1 month ago. There was a 90% chance as of February 9th that we would see a 25 basis point rate hike in March, and then it was still mostly certain that we get 25 basis points, and then starting on March the 8th is where we see the scale start to tip the other way, to a 50 basis point being the more likely of the two of them. Now, if you watch my other videos, you'll know that I said that the Fed should really take their time to pause, just to see the effects happening, because they said they have yet to see the full effects of their tightening, and yet they're talking about more and even being more aggressive. So we're going to have to watch that, especially for tomorrow's jobs data. So let me bring this up from Trading Economics, and you can see non-farm payrolls, 517,000, about 2.5 times what it was supposed to come in at, or expected to come at, I should say, for January of 2023. So consensus is coming in at 205,000. The forecast from Trading Economics is coming in at 210,000. If we see another repeat of January, I think that seals the deal, seals the fate of that 50 basis point hike, and the market is going to react pretty negatively to that. And I did mention that before, talking about jobs data in my most recent video. I do think that we probably come in closer to consensus on this one for February, and I think that's going to take some of the tightness out of the market's chest, watching that come in. Hopefully it does come in, that we don't have as tight a labor market conditions. That is one thing that was really going to keep the pressure on for the rate hike being 50 basis points in March. If that should ease back to 25 basis points in the next few days, we're going to see the market take a nice breath, but it's going to take some data in order to have that happen. I've been asked several times about Cleveland nowcasting, and I talked about this over my Patreon. It's one of the Patreon exclusive videos that I made, along with my CPI projections that I have over there, talking about the Cleveland nowcasting, the CPI for all items coming in at 0.54 month over month and 0.45 month over month for core CPI. And these values, especially when we look at month over month, they don't hit. The nowcasting, I think, still, it might be an okay indicator, but I still think it can vary within 0.2% for month over month, and that's huge. So 0.2% of coming in near the average, and which I think the post-pandemic average has been 0.4% for all items. That leaves us anywhere from 0.2 to 0.6. So coming in at 0.45, like, to me, it doesn't really say a whole lot. Now, they do collect some data that allows them to see that, and you can see the trend. I think that we had an energy spike back here, which allowed the red line to pop back up so quickly, so high, and that's CPI for all items. You don't see that in the blue line here, which is the core CPI, so it would be X food and energy. So that being a little bit more flat. Now, why is it so consistent if they call it now casting and they say about daily updates? Well, this is the part I'm a little bit skeptical on, because if we click on the table view and look at the first two columns, you can see the first column change a lot. Don't worry about all the numbers. Just worry about the fact that they do change quite a bit in that one. And then eventually towards the end of the month, we see a lot more settling as more data comes in for them. But core CPI, I think, is even more concerning for calling it now casting. This is what makes me so skeptical for it, that, yeah, they are working with data that comes in and reporting it out sooner. However, the last update in this column, the numbers don't really change from February 14th. So starting on Valentine's Day onward. And well, what happened on Valentine's Day? That was the CPI that came out for January. So that came out, and then they made further adjustments to core. That's what it looks like. And then they didn't touch it after that. So would I call this now casting? No, I would call it like a little bit better updated than just flat monthly, that we get somewhat of an idea, but it still puts us in between like 0.1, 0.2 of the actual value. And I can't say that it's any better than the projections that I put out already. So I do take this in as context. I think there's a little bit to be gleaned from it, but I would take whatever they say for now casting with a grain of salt, that they wouldn't necessarily hit. So here we're looking at the SPY today, going down almost 2%, negative 1.84%, coming down, actually just barely poking on through the 200-day and then sort of recovering and holding on to the 200-day, and that's crucial. So tomorrow, we get a repeat of January for the non-farm payrolls. We're breaking through this 200. Support will not hold in the event that we get hot jobs data from that. Like, you can just say goodbye to it. That's my opinion on it. And, I would at the very least say that it's significant downward pressure. I think it's the thing the market's looking for. So that being the, black swan events aside, of course, and always, like, we got to consider that downside. What does upside look like? What does support holding look like? Well, support holding looks like a number that's stable compared to what we have for consensus, which is right around that 200,000 mark. We want to be around that mark for support to hold. We might dip below it a little bit if it's a little high. We might bounce off of it pretty good if it's a little bit low, because the next eyes on the prize after that is the prize being CPI and PPI reports next week, Tuesday and Wednesday. So we could bounce off of this and maybe retrace just from this last day, maybe up that 50%. I don't know that jobs alone will be enough to push us back up over 4,000 in the S&P. That's definitely something to watch for. But if we do break support on the 200-day, there's not a lot holding us up after that. Then we're kind of, we have some weak areas of support that follow, another 1% to 2% down maybe from where it sits right now. So that would be a case for about 1%. And let me see. Yeah, I would easily say 1% to 2% down. And then tight labor market is one concern, but then also high inflation repeat of January is the other one. So I don't know that we get the huge, big, nasty drop off of jobs tomorrow. Maybe if we get a repeat of January, which I don't expect, I think we get something a little bit more normalized, and I think that we settle a little bit, we bounce off the 200-day, and maybe we put back on the board 1%, maybe 1.5%. We're going to have to watch and see. If we get a really good number, maybe we even put 2% up, and maybe we start testing that 4,000 back up at the 50-day and sort of holding around there until we get more information from the CPI and PPI next week. So that's going to become really important for us. Let's take a look at the Qs. All right, so on the Qs, we didn't actually make it back down to the 200-day. So in my opinion, the Qs are holding out just a little bit more resiliently than what we saw in the S&P. Now, even as a percent-wise, it was negative 1.84 for the S&P. We're down negative 1.73% for the Nasdaq. So that's pretty good for us. So to see that value come in where it's at, it did not, like I said, didn't come down. We have some room before the 200-day. So we could see that drawdown happen, and we could come down and touch that line. So that's about $3 down, so about 1% down from where we're at. And like I said, I think we break through this still if we get a repeat of January tomorrow. That's going to be that big telling thing. If we come in soft on that, if we come in at consensus, those are things that can allow us to put a few dollars back on, hold steady, or maybe even at the very least, hold support right at that 200-day. So those are my thoughts on that. So let me summarize. Immediately upon seeing jobs data tomorrow, thoughts are going to go two places. One is to the federal funds rate and the rate hikes that are expected for March, May, and June. The other place that it is going to go is to inflation, because regardless of what jobs data we get, that inflation number is still critical to the markets to see that inflation. Hopefully January is that one-off event that we're at the top of the range for that, and now we start pulling back from that. Those are the two places that it goes. Those are going to be the big indicators. If we get a hot number for jobs, then we better have a cool number for inflation. Otherwise, that 50% starts to become solidified and sealed for the Fed for the March meeting. So those are the two places to watch immediately after the jobs data come out. How is the federal funds rate impacted, and what can we expect for inflation coming out for the CPI? Because that is going to be better telling for how the market is going to react, because the market will immediately price in, based on the jobs data, how it should react based on what they think is going to happen in those those exact two areas. So those are my thoughts. That's my commentary on the subject. If you want to hear more of my commentary, grab that link for the Patreon down in the description. Click sign up. Meet me over in the Discord. Check out the Patreon exclusives on Patreon itself. We'd absolutely love to have you as a member of the community. And thank you for all the support that you show, even watching this video. Now, the last thing, support yourself while supporting this channel. Grab that link from Moo down in the description. Sign up, deposit your money, get your free stocks. And thank you for all the support that you've shown me. I really do appreciate it. Hit me up down in the comments. Let me know what you think of this video. Let me know what you think about jobs, inflation, Fed, you name it. Even just to say hello down in the comments. Subscribe if you haven't. Hit the like button if you like this video. Ring the notification bell to see anytime that my videos come out. I am Dr. Stock, Doctor of Education. We'll see you in the next video.